Hi there, this is Bruce at Fleet Capital Management. It is Friday afternoon, the third day of May 2024, and I want to take a look at the markets as we always do. April did not turn out the way we had hoped, which I'll show you on the charts, but I have a good feeling about May, June, and July, so we'll take a look at all of that. As always, we need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at Fleet Capital Management. Website, bottom button will take you to the most recent market analysis videos. Top button, please use this if you have any questions that we can look at a chart together or look at your accounts together. Always feel comfortable using this. This will just bring up my schedule, and then you can plug in a time that works well for you. I thought I would show you, I've shown you this piece of information before, but I want to show it to you again because I find it very interesting. This is since 1950, and how have stocks, the S&P 500, how has the market bounced back after a 25% decline, which is a very, very significant decline. And in the bear market of 2022, we were down over 25%. Actually, we were down 25% in the first 9 months, 25.2%. The average bear market decline is 37.6%, so that wasn't even as bad as we've seen in the past. And with our new bear market avoidance indicators, my best solid guess is we will never participate in one of these again, ever, because we look at it every day, and I think we'll just get stopped out. So in any event, the first 9 months of 2022 was down 25.2%. 1 year later, the market was up 21.6. So that would take it from October 1st of 22, which was really the bottom, until October 1st of 2023, we were up. So now if you take the fourth quarter of 2023, which is now past, and the first 3 quarters of 2024, you can see that 2 years following a decline of 25%, markets generally up about 37%. So we have quite a ways to go if we're going to stay in line, on track. These are averages, of course, but it gives me a good feeling right here that we, based on history, we have quite a bit of upside to go for 2024. Let's layer one more piece on top of that. A client just half an hour ago asked me a question. We were doing a meeting, and he said, but we're in an election year. How does that affect? Great question. The third year of a presidential term is generally the best of the 4. The fourth year, the election year of a presidential term, is usually the second best of the 4, and we're in that now. What I didn't mention, because it doesn't matter, is which party wins, Republican or Democrat. It really doesn't matter. If you look back over 70 years, the difference in return is like 1 or 2%. The reality is the higher return generally comes under Democrats, but it's so close that I would call it negligible. Doesn't matter which party is in power. So knowing or hoping and looking at statistics as to what could be coming is important. And the single most important thing is to know whether the market's going up or down. Everything else follows from there. So let's take a look at the market. Before we get to the charts, I'm going to show you our matrix, which is updated through today. On the very short term, you can see it started around April 12th and went right through. On the very short term, we've had a really difficult market. This looks like it's getting ready to change. If we have a good day on Monday and or Tuesday, these will go back into the green, I suspect. On the weekly indicators, we did have some weakness show up, but no, now those are both back into the green, so that's good. I've made a couple of changes to this matrix, so bear with me on here. On the daily MAs, which we've always looked at, I've added the 8-day, and I'll show you why in just a second. But a perfect bullish technical setup is the 8 is over the 20 is over the 50 is over the 200. Okay, we went to yellow in more of a pullback. Let me double check something here. 20, 50, this should have been red. So let me change that. I just adjusted all these charts, so it looks like I had made a mistake there. And I'm going to make this one red. And you'll see why in just a second. Bear with me here. Okay, so perfect bullish is this 8, 20, 50, 200. It's always going to be green. If the 8 goes below the 20, and it did it here, I'll have to add it to the graph. That's called a pullback. The 8 is below the 20. That's a pullback. These happen pretty frequently. They can happen 3 to 5 times a year. It is normal to have these pullbacks, and that just means that the 8-day has crossed below the 20-day, and that will be represented as kind of this mustard yellow. When the 50 crosses below, see, I need to change this too. I'm sorry, I need to change the colors. The computer didn't capture it. But the bottom line is a pullback is when the 8's below the 20. A correction is when the 20 is below the 50. That's what this is. That's a correction. I just need to change the color because the computer put the wrong color in. And then a bear market, these should not be red. They should be this color right in here. Bear market is when the 50 crosses below. So actually, I'm going to change these for you right now because I want this to be easy. Let's see. It's going to be that one and this one, because we haven't gone into a bear market, and I don't think we will. So now when you look at this, full-on bull market, normal pullback happens all the time. This color is a correction, and we hope to never see red, which is a bear market. Okay, so I made those, and hopefully that will make it easier for you. I know I kind of had to bumble through it a little bit, but I want to make it easier for you to see where we are in the market cycle. On our bear market avoidance indicator, this is our most important indicator. We have not changed. We've just been, this is either green or red, period. That's it. If the 10-week is above the 20-week, it's green. If the 20 weeks above the 10-week, that is a bear market. This is the most important indicator that I have, okay? And then the VIX, which is the fear index, I've made a little bit of changes here too. When it's green, that means it is at about 17 or below. 17 to 20 is going to net, like it was here, is kind of a mustard color. That's just doesn't mean anything other than there's some fear is really creeping into the market. If it goes over 20, that's red, and that is a real negative sign that we could have some, and VIX can be very short term. This generally means we would have a swift, short-term, dramatic pullback. Okay, so I changed these colors too to try to make it more readable. And then the IBD exposure rate that they do, I don't trade off of this. I just use this for informational purposes only. If it's a 4 or a 5, it's green. If it's a 3, it's that mustard color. If it's a 1 or 2, it's red. And it went from 1 back up to 2, back up to 3 today. So hopefully we'll get back up into the 4, 5 here. We're already green here. I think this is going to change pretty quickly to go back into the green. And I think these short terms are going to change. I'm going to show you that in just a minute. So hopefully at a glance, this will make it a little bit easier for your eye to see. Are we in a pullback? And you just need to remember pullbacks are really common and normal. Corrections are more painful and can last a few weeks, a month, 2 months, and bear markets we hate. Okay, I hope that helps. Going over to the chart, this is the S&P 500 on the daily chart. And what you can see, let me take the linear regression off for a second. See that white line? That white line is the 8-day moving average, and it looks like it's getting ready to cross back up over the blue, which is the 20. And then what we also need is the 20 to get back up above the 50. And so we're in a correction here. We're in a correction. That's what that will look like. And a pullback would have been when the 8 crosses the 20 right there. That's pullback. But it continued on where the 20 crossed below the 50. That's a correction. And now it looks like it's starting to change. And if I put the linear regression back on, we are back inside we came down a little bit. Remember what I've always told you? If we go outside the linear regression, we normally come back up, and then it did it again, and it came right back up, and hopefully we'll go right back into a continuation of the uptrend. That's what I would expect to happen. Okay, a couple other things that I'm seeing that I like is this is on balance volume, which is just looking at all of the orders that were placed in a day and looking at who's got the power. Are the sellers putting in more orders or the buyers? And there's a seller and a buyer for every transaction that takes place. But who is more aggressive? It's been sellers. It looks like that might be getting ready to cross back up to the buyers. This is going to be really hard to see, but there's a green line. These are the DI lines, directional indicators, and it's kissing. It looks like it's going to cross back up over the red. That would be a very bullish sign. This is the RSI. Relative strength is over that 50 line. That is a bullish sign. So hopefully this is just going to continue up in this general up 45-degree trajectory. That's what we like to see. April, this is my seasonality chart. And April historically meaning the last 20 years, 80% of the time has been positive. And I was also very positive on April. April just didn't turn out that way. Was it because we had such a really almost overpowering bull market? Yes, bull markets need to take breaks from time to time, like I said. So this is an average. This means 80% of the time that month is positive, but it means 20% of the time it's negative, and we fell into the 20% of the time. But if you look at May, almost 90%, 89% of the time, May is positive. June, 78% of the time, and July, 100% of the time. These are generally really, really good months in the market, and that's what I would expect. I expect that going forward. If I look at the Qs, which is the NASDAQ, the more aggressive index, it's very different. May, about 67% of the time, but look at the return, 2.18%. June, only 56% of the time, but it's up 1.29. July is a barn burner, actually the best month of the whole year for the NASDAQ. It's been up 100% of the time over the last 20 years, and it's generated a 5.28% rate of return. So what does this mean? What does all this mean? Well, we were stopped out of a couple of stocks, and because of a little bit of weakness in the NASDAQ, I will probably be looking for S&P type stocks rather than NASDAQ type stocks to add. I can't guarantee that. It just depends on which stocks are setting up and looking the best with the best charts and fundamentals. But I will, if I have to make a choice, if I've got two stocks that are equally good fundamentally and equally good technically, but one of them is part of the S&P 500 and one of them is part of the NASDAQ, I'll probably err towards the S&P 500 because of these numbers, just to try to stack odds in our favor. That's what we're always trying to do. Lastly, let me go to the weekly chart for a second. Let me change a couple of indicators. Okay, the bear market avoidance indicator is the blue. That's the 10-week above the gold, which is the 20-week. And you can see we're fine. It bent a little bit, but we're fine. We're nowhere near a bear market. The white is a 2-week moving average. That came down below the 10-week, which is a pullback or a correction. And now I hope you can see it, it's back above the 10-week. So that's a very bullish sign. So I've got bullish signs popping up all over the place. It's not a predictor, it's an indicator, but the indicator is right a whole lot. It might not be right 100% of the time, but it's right a whole lot. Let me go back to daily. And there's the daily S&P. So that's the bottom line. We had a fabulous day today. The S&P was up 1.26. The Qs was up 2%. And you can see a number of our stocks were up fairly strong. And a couple of our ETFs were up fairly strong. So we had a really good day today. Bitcoin, for those of you trading that with me, was up almost 5% today. So that was real good. So bottom line is we had a bit of a rough April. We did have a correction in April. First a pullback and then a correction. That's the order it happens. But now it looks like we're hopefully reversing, and we will then go into a typically strong May, June and July, and have hit some new all-time highs before the doldrums, which are August, September. Those are the two worst months of the year, almost every year. Not every year, but almost every year. And then the first half of October tends to be weak, but the second half of October tends to be really strong as we go into November, December. So lots to look at. I'm searching for stocks this weekend for you. I hope this makes sense. Remember, full on bullish, pullback, which is normal, correction, which we don't like, but it happens. But we still on our weekly, which is most important, are in a full bull market. So things are getting better. That's a story. I hope you have a wonderful weekend, and we will be back at this Monday morning. Talk to you then. Bye-bye.